Good morning, traders. Today is April 15th, Saturday morning. My name is Brad Matheny. This is your metals miners update. I wanted to keep you aware that we are seeing a pretty solid move in metals and miners. And if you're following my research, you know that we should be expecting some sort of a peak over the next week to 3 weeks. Metals have a little bit more to go. But they're likely going to be topping out. I'm going to be talking about that and where you're going to find some opportunity right now. So reminder, please go to MENT.com, check out what I do. Remember, I'm here to help you try to find and take advantage of trading and investing strategies and technology so that you can stay aware of and profit from the biggest moves in the market. My goal is to do what I do best, which is research. Building technology, building strategies, building systems, finding solutions to help you become a better trader. And that's exactly what I do. I offer it all through my Expert Growth membership. It's a very inexpensive membership. It costs about $55 a month at the discounted rate. I offer a 60-day trial for $34.99. I want you to be aware that it includes everything that you need to go ahead and get started. For example, here's the Expert Growth page. Hopefully it fits in here. Let me slide it over a little bit. Inside of the Expert Growth member area, you have the member updates, the video analysis, the custom index analysis, the weekly hot list, the weekly stock picks, which are brand new every week. I select 2 to 3, maybe 4 individual stock picks to give you opportunities to look at and try to trade, as well as my cycle pattern index and member support. All of my updates are updated on the page here for you so you can see the dates, small text message to tell you what's going on, and then once you get in, you have access to the actual update itself. In the previous section, and I need to move this, you also have the ability to see the video analysis, which provides you independent video analysis every week, as well as my custom indexes, which are part of the primary service regarding the actual trading system. This is the investment modeling system. This is what we rely upon as investors. So hypothetically, if you have $1 million in your trading account, you would be, or in your portfolio, you would be allocating roughly 800 to 900,000 to this, 80 to 90%, keeping a small cash reserve of maybe 5, 10, 15%, and then dedicating the rest of the capital into making discretionary trades, which is all about, knowing what the market's going to do, where to find opportunity, and where to trade. So again, all of this is ready for you, and I'm trying to basically be your private researcher. I want you to remember that, okay? So let's go back over here to the charts and go over the data. So we're going to go back here, start off with silver, and this is a monthly chart of silver. This is the 2011 peak. And remember, I keep telling everyone that we're back in this 2003, 4, 5 time frame. So understand that we're really kind of in this time frame right here, just getting started, okay? We are very much in this mode. There we go. We are very much in this mode right now. So understand that we are just in this beginning expansion phase. We are not there yet. And because of that, I would expect, now this is the line that I've drawn many weeks ago. Let me get rid of it. I would expect silver to attempt to move up into this area, kind of like we've seen. So this is what I expect to see happen for silver and silver miners. I expect silver to move up, stall back out a bit, move back up, stall out, and move up. Maybe into this 40-45 area. Okay? And what that would be a very similar move to this. So understand that we have here a move up about, let me get rid of the extend mode. And we have a move of about 80%. Okay, and from this level here, down here, up to here, we have a move about 130%. So if we move it down to about 100, 104, that would put us up in this $39 area for silver. Now, what happened after this is we reached a consolidation, we reached an apex flag, and then we saw the big expansion here, 600+%. So understand that when we come back over here and we flag out over here, potentially like this, and I'm actually drawing this wrong because we only have until 2025 roughly. So I'm going to try to draw this properly. We're going to see this move up roughly from here, stall out, move up to here, stall out, and then 2025, 2026, maybe up in this area. Now, at this point, what would happen is we would essentially be back over in this area, peaking. We would attempt to flag sideways in this area. Then we would get the big expansion phase of potentially 400, 500, 600%. So the real move here is, again, we're going to see it move, but we're going to see it move in 2024 and 2025, then stall out in 2026, maybe lasting into 2027, probably. And then we're going to get the big expansion phase. We are right here in this mode right here, kind of really possibly in this very early stage back over here, trying to move into a sideways flagging formation. It's probably going to be fairly quick. But understand that traders, if you really look at this, as far as silver goes, to get to where we're at, we have maybe 15, 16% in silver, maybe a little bit more before we're going to stall out. So you need to understand that silver's got a very limited upside move right now before it stalls out, and then we're going to see a bigger move probably into, let's just take a guess here. Yeah, probably around April, May, June, July 2024. Okay, let's take a look at gold. Same setup, guys. Tried to highlight this to you yesterday. This is the gold monthly chart. Again, I still believe that we are in the 2003, so kind of in this mode here. So let's take a look at pretty much all of this through 2005. So this is kind of where we're at. And understand that this bottom here is really pretty much this bottom. So I'll do it again here. No, we're kind of in this mode, okay? We've seen this rally. We've seen this topping formation with the stalling. We've seen we're at a rally to a new potential high, then a stalling, then a big breakout. So again, when we come take a look at this, and I'm going to try to draw this for you. So we've seen this rally up to new highs, the stalling, the flagging, the rally to new high, then stalling, then the breakout. So here's our rally up to new highs, stalling, rallying up to a new breakout, stalling again, and then the big breakout. So what I'm trying to tell you is this is, let's call this A1, which is this peak right there. And I believe that we are setting up an A1 right here. Okay? So understand that we're getting into this same setup. So the real move isn't going to come until 2027, 28, 29. I believe that we're setting up in this mode here. Now, just for comparison, GDXJ. And let's go ahead and add GDX. So we have these down here, and we are going to move to new pane below, and we are going to move to new pane below. So understand here that it's difficult to see with the miners here, but we are a very early stage here with miners. Okay, we don't have the data going back, but we're a very early stage here with miners. Miners were up. I'm going to move this to regular scale, move this to regular scale, move this to regular scale. And I want you to understand that we have, hypothetically, miners back in this time frame may have been, you know, way down here in this area. Okay, and we saw a 260% move in miners. We hypothetically, miners may have been down near these lows, let's say, and we could have seen a 345% move there. Given where we're at over here, and given the fact that I believe we're in this narrow phase, this early stage phase, actually close to A1 right now, where we had this massive rally phase, we could see miners, again, rally substantially, maybe 300 plus, maybe in this case 250 to 300% at this point. So this will go 100 and try to shrink it down. So there's our roughly 180, okay, 180%. That would put, this is GDXJ, just the GDX, I believe. I'll have to check. It's not showing me. Yeah, it's not showing me. But anyway, the long and short of it is we have a very good opportunity here for miners. Okay, now, what I would suggest you do is diversify across a series of actual miner stocks instead of the ETF. Possibly putting 10, 15, maybe 20% into the ETF, expecting this blowout phase over the next 12 or 15 months. But again, you want to time this efficiently. Miners are going to continue to react while gold and silver pull back. Okay, that's just the way it is. If we get to new highs, if we get up here to this A1 pattern and get to new highs, we are going to see miners continue to move higher. And this is going to continue all the way through 2024 and 2025, possibly putting miners up into this 80, 90 range here, and possibly putting them up into this potential higher range, 45 to 55 back over here, which is, again, a 20, 25% rally here and maybe a 25, 35% rally here. The real move is going to come after 2025, 2026, okay? That's where we're setting up. So right now, as a smart trader, you would be looking for anchor positions. When I say anchor positions, you know, possibly taking 10, maybe 20, maybe 25% of your discretionary capital and moving them into a number of different mining. Platinum, palladium could also do well. In fact, let's take a look at PL. So see here, we've got the same type of setup. Okay, this is a platinum, and you can see here 2003 to 2005. We had roughly this move here. So this is 2. Here we go, 3 to 5. Stalling, and then the breakout. And this is, again, what I want you to focus on, is this move here, this stalling, and then this breakout. So here's the same move here. This base, the peak, the stalling, and then the breakout. So we will call this A1 with the sideways breakout. I actually need to move this a little bit. Move this over here, A1 breakout. And where would we be here? This is going to continue to migrate around, and we are going to likely see the breakout in platinum and palladium take place as soon as potentially early 2024. That's what I'm trying to tell you. April, May, possibly 2024. So I'm going to draw a line here and try to highlight the fact that this April-May timeframe in 2024 could be a very strong move in metals. I believe that as we head into the election in 2024, there's going to be a lot of uncertainty. People are already, foreign nation BRICS are already trying to move away from the US dollar. I have my own beliefs that that's going to unsettle the markets a bit, cause additional fear and uncertainty. and I believe that we're in a stagnation period in the markets that are moving towards a breakout phase in metals. It's just not going to happen until after 2020, roughly right here. I believe that by June, July 2026, we are already going to be in a massive rally phase. And again, platinum and palladium are side metals that not too many people follow, rallied 157%. In this case, we could see this move to 300% on a massive fear event. And palladium, again, is doing the same thing. These patterns set up everywhere. So 2003, we have a base right here to 2005, almost the end of 2005. Trying to get my mouse to cooperate here. There we go, close enough. Let's go A1 and label that right back over here as the breakout. And what we have here is we have the pullback, we have the peak, we have the secondary pullback. Now we're going to move into that upward move. So here's our base, here's our peak, here's our secondary pullback, and now we're going to move into that August, April 2024 time frame right here. And that means that we are going to likely see palladium and platinum move off of this level and then begin a big rally, which again took place back here in 2023. Now, 2008, 9, 10, 11, palladium didn't skyrocket, okay? And why didn't it skyrocket? Because palladium is an industrial metal, okay? Palladium is what is used for healthcare, vehicles, automation, advanced switching and control logic. Palladium is different than platinum, but palladium could still have a big ramp up. I need you to understand where we're at. So the palladium rallies during investment and economic boom cycles. So you can see here, after the collapse in 2009, we had a revamp here of palladium. We could see a boom cycle coming after 2005, 6, 7. If you're following my research, we could see a very good move here. But in periods of collapse, I'm going to try to highlight this. 2008, 9, 10, what happened is we had a bit of a spike and then a collapse, okay? And that I want you to be aware of, is that we get collapses. Here in 2000, to the dot-com bubble burst, you can see we had this spike, fallout, recovery, and then we had this collapse as the 9/11 time frame hit right over here and the economy moved into contraction. During COVID, we had the same thing, this collapse back over here. Okay, during the 15-16 time frame leading to the election, we had this collapse. So if we were to move into some sort of a crisis event, palladium will move downward, and you will be able to see this fairly quickly in some sort of a economic contraction, which is what we're seeing right now. You can see this contractionary phase is basically reflecting lower consumer demand, lower manufacturing globally, and lower demand for palladium simply because we're not using it to produce like we were back in 2020 and 2021 or what have you. We're seeing this lower demand right now. Okay, before I run out of time here, we are going to go over to my custom indexes. Custom index for gold is showing that we are still seeing appreciation. This is a monthly chart. This is the beginning of February here. This is the beginning of April. We're about halfway through April, and we're seeing no real upward appreciation in this gold cycle chart. This is what I warned you about last week and many weeks ago. We could take 4, 5, 6 months to be able to actually move above this 45 to 47 area, which I call the trigger level, to move higher. Gold and silver have a long way to go, possibly all the way into April 2024, or at least early 2024, before we're going to see the massive appreciation phase that everybody's waiting for. So be patient. Don't be chasing these trends. Right now is the time to get into some anchor positions and prepare for the next 12 to 24 months. It's going to be slow at first, but it's going to ramp up after April, May, maybe June 2024. The custom fear index, I need to shrink this down. Get this into the chart for you. So the custom fear index is a way of seeing how the world is looking at U.S. stock market equity potential. Right now, the fear index has moved down, minus 4.23%. We are getting back down to that 6.85 level. We got to move down here into a little bit lower level. The SPY here is moving upward. Remember, my target's 425 to 435 on the SPY. We're very, very close. If you do the math on this real quick, we only have to go about 12 or 13 points, which is about, what is that, 2.5%, 3.5% maybe. It's not too much further away before the SPY is going to reach my upper target and potentially stall out. The custom sentiment index is rallying a bit higher here. I do not expect this to move substantially higher. We might see a bit of a pop. This is a weekly chart. We might see a bit of a pop up into this 390, 392 area as it reaches the peak, but then we're going to roll over into a consolidation. This will likely be the end of wave 1, reflecting a wave 2 to the downside, and then a wave 3 higher, and then a wave 4 to the downside, and then a wave 5, which will possibly take us to new all-time highs. The U.S. leading index has reached this peak level. You can almost see a double top level across here. I believe, ladies and gentlemen, that the U.S. stock market is going to still move higher for another maybe 7 to 10 days. But I believe gold and silver are going to struggle to reach that 2150 level in gold and are over the next 2 or 3 weeks. And then suddenly the market is going to turn a bit sideways and gold and silver are going to consolidate. So again, we're very, very near to that topping pattern. You need to be very cautious with regards to how aggressively you try to time any long trades. You're going to hear a lot of people talk about breakout in gold or you should buy and load up. I'm telling you right now, nope, you should not. If you had been loading up on gold and silver over the last 2 or 3 weeks, you're likely going to be under pressure over the next 2 or 3 months with your purchase. You need to be buying gold and silver when the opportunity strikes with prices moving downward. And this is, again, what we're looking at with the S&P and the U.S. market. You may have another 3, 4, 5% to the upside, maybe, but then I believe the markets are going to roll over and potentially move 10, 11% to the downside, trying to set this wave up. Okay, next, we have the metal standard deviation weekly chart, and this is, again, highlight this. You can see this support channel here, so we're likely to see a pullback down into this support channel. And I want you to be aware that this is going to be probably hold gold above 1940, 1950. But I believe we're going to get rejection here. I believe that this is kind of like this, pulling through it, pulling back down into this rejection, and then finally another attempt over here, potentially for gold. We are in an upward channel. We could get a breakout. If you take a look at this, we have a base. And then we have an A, B, C, D, and then an eventual breakout to the E side. We will see how that plays out. We need to see it hold up, but we're looking at, again, a pullback in metals, which is going to be a surprise to people. Everybody's chasing this. If I read the Twitter feed and some of the other news feeds I follow, and there's a lot of people out there that are, buy, silver's breaking out, gold's breaking out. I don't disagree, but my interpretation is long-term. Longer term, I don't see the real opportunity for the big breakout to occur until March, April, May of 2024. I think you have between now and then to be buying at dips and loading up and positioning. That's almost a full year here to be positioning, setting up your anchor trades and preparing for what comes in 2024, 25, 26, 27. So be aware, we're not at that breakout point yet, in my opinion. custom metals trend index. Remember, I've been telling you that 13,400, 13,500 would be likely the peak. We're very close. This is pretty much where I had drawn the peak, indicating that this would be the top in metals. I've been telling you this for months. We are very, very close. We could see a bit of a blow-off rally here trying to target this level, or this could be it right here. I still think we have maybe another week or two of upward trending to go. I would be looking at 2120 roughly in gold, and maybe 2610, 2615 in silver. Understand that, that's probably going to be about it. And I would not be chasing this trend. I am not, let's put it this way, I am not actively seeking to buy any precious metals right now. I've loaded up already. This is near the end of a rally phase, and I'm going to be patiently waiting to try to get into lower prices. Silver possibly back in the 2022 area. Gold possibly back in the 1940, 1950 area, unless I come across a deal. Now, metals and miners and junior miners, yeah, I've already been positioned in those. I'm telling you, those are the next phase that are going to appreciate as gold sets up this stalling stagnation pattern. Okay, so we are again very, very close to the peak, and remember, I expect it to stall out, likely potentially into late fourth quarter this year, possibly into early first quarter 2024. And the new valuations trend index with my beautiful Fibonacci price amplitude arc. This is a monthly chart. And what I want you to be aware of here, folks, is that we are still struggling to get out of this trend. So understand, this reflects the upward move in gold and silver right here. So take a look at this. We're at new all-time highs on this chart. This is the trend index. This is my proprietary trend index. Then we have the standard deviation channel, which is lower highs coming down, still trying to break out this channel. Then we have the cycles phase index, which is showing us that appreciation is not actually taking place right now. I mean, it is, but very minor. Think of this as, pulling out of your garage. How fast are you going right now? Maybe going 10 or 11 miles an hour as far as gold and metals price appreciation and accumulation. Okay, and then lastly, as we come back here and you look at this, this is showing us that we have yet to see any real metals valuation increase. We are still stalling. We have not gotten past this level yet. We need to see metals really start to appreciate, and we're not seeing that big breakout yet. I believe we're going to move into a stalling formation. So we have our base. Actually, you could call this the base, but if we do, it's A, B, C, D, and then an E breakout. Or if we call this the base, it's A, B, C, D, and then eventually E as a breakout. We still have time, ladies and gentlemen. This is not the big metals breakout everybody thinks, okay? And there should be one more chart here. Yes, the metals index, which is more closely correlated to what gold and silver are doing. You can see here that we are stalling back out near these highs. This is why I think we're going to get back up into this area, maybe 2100, maybe 2120, maybe 2150 in gold, and then stall out. And then we will move into a stagnation period, which I think will last about 2 or 3 months. It may be a bit longer, but I think it's going to be about 2 or 3 months. Based on what I've shown you. Okay, I think that's it for the charts. Oh, no, I have one more. Oh, the custom volatility index. This is, again, one of the reasons why, this is March 24th. This is an older one. Okay, you'll have to watch my other videos for this. Watch the investor update for this. The custom volatility index is now up at around 12, back up over here. This is an indication that we've reached kind of a peaking level. We could still go a bit higher up in the 13, 14 area. That would be stupendous, indicating that we're in a new upward trend. That's what this is telling us. But anything above 12, 13, 14, 15 is really nearing potentially a peak. It could still go higher, but we're very, very close to an excessive peak. Remember, this was the excesses after COVID in 2021. This was the pre-COVID excesses. So you can pay attention here that when you get into this area or this area, which is 12, 12 and a half, 13, these are peaking levels. These prompt, 7 to 11% pullbacks very regularly. And even during the big bubble phase after COVID, we pushed up to 15, 16, 17 way up here, but we saw some very substantial pullbacks before we topped. I believe this capitulation bottom is the absolute bottom of the market, at least for now. The move up here to 12, 12 and a half on the volatility level says that we're in a bullish trend, a moderate reflation trend, but we have the presidential election coming up and a lot of uncertainty over the next 15, 16 months. Metals will likely attempt to hold up, meaning not pull back substantially, maybe 7, 8, 9, 10%. So maybe, we move from 2100 down to 1910, 1870 on gold. But the reality is the markets are setting up for the next 15, 16 months of indecisive sideways flagging. The real opportunities, if you follow my research, come at the end of this year, Q3, Q4 2023, and Q1 2024. And then we are likely going to be moving into another sideways pattern until after the elections in 2024. Okay, guys, a little long today, but very worth it. I hope you guys are paying attention. Remember, come back over to MENT.com, sign up for my expert growth, get all of my research here. I'm trying to help you prepare for and trade these big market trends. At $55 a month, like I said, if you are an active investor and you want to have my research, want to know what's going on and where these market cycles are and how to protect your capital, I'm doing my best to deliver you the best research possible anywhere. And again, all you need to do is watch my videos on my YouTube channel. Down here near the bottom of the main page, there's a link for the YouTube channel right here. When you go there, follow my research. Follow what I'm telling you. Follow me on Twitter. Take a look at what I'm doing on Twitter, because you will see that I do not flip-flop. I do not play games. I give you long-term, intermediate-term, and short-term research for you to take actions and trade. I'm not here to hype one thing or another. I'm here to tell you and advise you on how to protect your capital and how to grow your capital efficiently. That's it. Okay, guys, appreciate it. Talk to you soon.